Hey everybody, welcome to North American Insurance Services Long-Term Care Awareness Week. I'm Eric Jans. So this week we're going to have new content every day on the website. So if you take a look there at the URL, if you log in every day, you'll see some new content. You'll have a chance to win something at the end of the week if you write down all 5 of the secret words and email those over to me. We'll put your name in a hat and there'll be a big prize at the end. Also, another note is that every day this week at 2 p.m. we'll have the webinar, but you will need to sign up separately for each webinar. They all have a separate link. So this one today, after this is over, you won't be able to get back into it. It'll be a separate link for tomorrow, and then Wednesday, Thursday, Friday. So starting off, I just want to talk about today the focus is on the problem. Why are we talking about long-term care? So just as a definition, long-term care refers to services that support individuals with chronic illnesses or disabilities who are unable to care for themselves over an extended period, addressing both their medical and non-medical needs. About 70% of people who reach age 65 are estimated to need long-term care at some point in their lives, and approximately 10,000 people in the US turn 65 every day, which is a trend that's expected to continue as the baby boomer generation retires. So it's a big problem. According to the Genworth Cost of Care Survey of 2020, the national median cost for a private room in a nursing home was $105,850 per year, and the median cost for home health aid was $54,912 per year. So who's going to pay for that? A lot of people think it's going to be their Medicare is going to pay for that, or maybe their Medicaid. That's not the case. So we're going to talk about that today. On the line with us today, we have Kevin Riley, who's a regional sales director at One America. He's been in the business a long, long time. I think over 30 years, if I remember right. And he used to be also with Genworth, and before that with Protective. And we've got 3 of our people here from Concourse Financial. Rachel Smith, who's the vice president there. Misty McMinn, director of internal sales. Both of them have over 20 years of experience in the long-term care field. They used to work with Kevin at Protective, and also Phil Hogg, our regional director at Concourse Financial, is here with us as well. So they'll be all available for questions and comments, but I'm going to turn it over to Kevin to tell us more about long-term care and the problem that we're facing.
Good afternoon. Thanks for your time, everybody. Let me start with a story. Let me share with you some insight and some analogies on how we're thinking about long-term care and how people should really address this problem. I'm sure you're all familiar with the song Hallelujah. Widely popular song. You hear it every event that you go to nowadays. Well, in 1984, when Leonard Cohen wrote the song, it was actually 85 verses. He cut it down to about 14. The word hallelujah actually means praise ye the Lord in Hebrew. Well, he releases on an album Various Positions, and the song does nothing. Think about how popular that song is today. It does nothing. That's in 1984. 1994, a gentleman by the name of Jeff Buckley reintroduces it on his album Grace. It's actually his version that we're more aware of as the popular version today. Still does nothing. Think about how popular that song is today. Does nothing. Wasn't released as a single until 2007. 2014, it was inducted into the Library of Congress. Every great singer you know has a version of it now. Bon Jovi, Lady Gaga, everybody you know has a version of that song out. So you might be wondering, how the heck did this song get so popular if for almost 30 years it sat around and did nothing? Well, in 2001, an unlikely event happened. It was in a movie, Shrek. It was in the movie Shrek. That's what made the song popular and got it into the mainstream media and everything else that we see today. So you're probably wondering, what does that have to do with what we're talking about today? Well, the company that made the movie Shrek was DreamWorks. Well, DreamWorks' vision statement is, we are a movie, we make movies about dreams. And the path that unlikely characters take to achieve those dreams. So think of your clients, they're not unlikely characters, but they all differ. They go through life and where they're positioned in life. and things of that nature, but they will take these unlikely paths, and at some point in time, they may make decisions on things that at that point in time really don't affect their lives. Difficult decisions to make, because you're looking farther out and you're going, heck, I don't even know if I'll ever use this or this will ever happen. And then something happens, and it'll go from being a decision you made 20 or 25 years earlier that you never foreseen happening to being the greatest thing you ever wrote in your life. And that's really what long-term care is. See, we go through life and we're born, we focus on birth, we focus on death, we focus on everything in between, all the good things happening. We go to school, we grow up, we get a job, we retire, we travel, and then in everybody's mind, you just die. Well, that's not actually what happens in life. The way life proceeds, and I always go back to Viktor Frankl's quote, that between stimulus and response, there's a small space. And within that space, you have the ability to decide whether you want to enhance or destroy a relationship. Well, what we're talking about today is that small space and time in your life at the end of life between when you're fully capable of taking care of yourself and death, where you need care. That unlikely we say that we're not going to need it. And it's on your screen, 70% of people at some point in their life over the age of 65 will need some sort of palliative care. Now, I don't want you to think about it as nursing home. As a matter of fact, industry-wide, 75% of claims paid, home health care. What we're talking about today is that small space and time where you need care, and how do you position yourself where you receive the care in a place where you're most comfortable and a lifestyle that you envision for yourself at some point in time that will be received. About 13% of the claims are assisted living, only 12% are nursing home. So although we always focus on nursing home, for those people that have a plan, they're most likely to start and end care at home. But we say that 70% of people will need care. Now, there's a way out of this that you don't have to worry about it at all. And that's die young. No one's signing up for that. So we have to take everybody serious, and everybody should be focused on this. But there's two factors or two percentages we never talk about. 91% chance at least one person in a couple needs it. 49% chance that both need it. 1 in 5 people will need it for more than 5 years. If you look at caregiver support right now, when caregivers are polled, the average caregiver says they're giving care for 5.5 years to somebody. So how do you plan for an event? And we focus on the money all the time. And it's on your screen. Genworth's cost of care. You take a look at that, $105,000 per year currently, $54,000 if you do a home health aid. What's the greatest growing version of long-term care right now? The greatest percentage of care? Adult daycare. It's the baby boomers who have to take care of their parents that are still working. But what we don't talk about, we talk about the cost, what long-term care actually is, or long-term care planning. A long-term care policy not only provides you with the money. See, long-term care is a resource issue. Anybody who's been through it will tell you this. The money's great, and rich people know this. People that are wealthy will tell you this. I have all the money in the world to pay for it. I meet with people all the time worth 25, 30, 40, $50 million. They'll purchase these policies. It's not because they don't have the money to pay for it. They need accesses to the resources to give them the lifestyle that they've envisioned for themselves at some point in the future, because it affects both the family and the caregivers. When you're talking to people, it's not just a patient. Somebody has to be providing the care, and it usually is a family member at some point in time. Or as Rosalind Carter likes to say, you're one of 4 people. You're going to be one of 4 people in life. Either you're providing care, you've been a caregiver, you're going to be a caregiver, or you're receiving care. And when we talk about long-term care, as the screen says, you're looking at people 65 and older, it could happen younger also. So we tend to focus when we talk to people about these policies, The average claim does come in between the ages of 78 and 81. The majority of the people are going to be more advanced in age when they put claims in. I guarantee you that. But what happens if you're younger? What happens if you bought this policy when you were 55 and you were diagnosed with early stage Alzheimer's at 65? You could be that 1 in 5 that needs it for more than 5 years. And if it's younger, it's usually a catastrophic event. It's an ALS. It's an early stage Alzheimer's. It's dementia. It's Parkinson's. It's something that's going to require for you to have more care for a lot longer period of time. So how do you position yourself, or how should you be thinking about this? Now, Medicaid, Medicare are great, but I like to ask people when they say, well, I have Medicaid, I have Medicare, I have personal insurance. I like to ask them, what's your plan after 90 days? What is your plan after 90 days? You have a plan. If you bust your knee up and you need a caregiver or you need rehab, Medicare, Medicaid, private insurance, they're great. They're going to get you through rehab. They're going to get back on your feet. You need 15 years of care. Your personal health insurance is not going to cover that. And when we talk about this and you say, well, if it's access to money and it's access to resources that these policies give me, what is it actually I should be looking at, or how should I be judging a plan of care? If you read any of the experts, if you look at any of the books out there, financial planners, brokerage houses, insurance companies, the people that are leaders in the industry, every single one of them will end to talk the same way. If you want this to be a triumph and not a tragedy, it's 3 words: have a plan. Now, does the plan have to be what we're talking about today? Does it have to be purchasing insurance? No. I will walk you through and share why we think this is the best way to approach it. But at least somebody should have a plan, even if they don't want to do that. Now, if they don't want to have a plan, it's easy. What I usually tell people is just think about the loudest, most obnoxious person in your family, because that's who's going to be making decisions for you if you don't want to talk about it 30 years before it happens. But how should you be thinking this? How should people should be approaching it? If you look at the book Being Mortal by Atul Gawande, he goes through the book and he's a consultant with the medical industry on how to basically handle patients better, how to have better relationships with patients. But the book Being Mortal is accepting your own mortality. And what happens in that small space and time, and how should we be looking at it? The whole book is about people in long-term care and terminal illness situations. If nothing else, I would recommend a book to everybody. There's a whole chapter on where nursing homes and assisted living facilities came from to give you a great history of why these are highly unregulated and hard to regulate businesses and why they struggle. But the book is about those patients and the struggles that they're having and how they ended up where they're at and what they would recommend to other people. What's amazing about the book is you get 2 themes. The first theme is they asked every patient, whether they were terminally ill or in a long-term care situation, how did you end up here? And every single patient answered, this is not the lifestyle I envisioned for myself. In other words, they did not have a plan. They saw their life playing out very differently. But the mistake they made was not planning for that small space in time where they had the ability to enhance or destroy the relationships they had with their family and the people close to them, because it was required them to invest a tremendous amount of time and energy and money into making sure those last few years were of their liking. And they still ended up in a place that they didn't envision for themselves. So the first question I like to ask every client, and I would ask yourself, since we're all in the same boat, is describe for me a lifestyle you envision for yourself should you ever need care for that small space and time in your life that you may need care. Now they have, and that's what we're talking about. That's what a long-term care policy and plan does. It guarantees a lifestyle you've envisioned for yourself at a point in time where you didn't think it was very important or was ever going to happen to you. The second thing they asked the clients was, what can we do, or the patients, what can we do to make you happy? Every single one of them, regardless of their background, where they came from, their socioeconomic position. It did not matter. They all used the same two words. All I want back is my independence and my dignity. My independence and my dignity. So what's the long-term care planning? Where do these policies fit in? Well, they fit in that small space and time when you need it, so you can enhance the relationships you have with your family and close ones, that you're provided both the resources and the financial support that you need, but they also provide the family as well as the patient the independence and dignity that they want for themselves at the end of life. They don't want other people making decisions for them. They don't want to be institutionalized. You know, 90% of us, when asked, say that we want to die at home, yet 90% of us die in an institution at some point in life because we never had a plan for that portion of our life. Now, I really would like to know what the other 10% answered. If only 90% said they wanted to die at home, I think that would be interesting. But as a society, we tend not to talk about death. We don't talk about getting sick, yet they're natural parts of life, and we are living longer. We're living longer lives. We're not necessarily living healthy lives. We're outliving our bodies. So although about 60% of the claims are cognitive, dementia, Alzheimer's, Parkinson's, and things that you would associate with old age, a good portion, 40 to 50%, are naturally part of the aging process. You've aged out of your body. You can't get around anymore. You need help getting up in the morning. You need help dressing. You need help bathing. You need help eating. That's a long-term care event. And on the screen, it says 10,000 people a day turn 65. 2/3 of the people in the history of the world, now the world's about 5 billion years old, 4.5, 5 billion. Humans have been around for about 2 million years. That's all of us. But 2/3 of the people ever to be 65 or older are alive today in the history of the world. In the history of the world, the last 4.5 to 5 billion years, only 1/3 of those individuals that lived to be 65 have lived. 2/3 of us are alive today. So there's a growing trend of our population that's going to enter this type of care. And what is your plan? What stewardship are you putting forward to plan for that small space and time, as well as the fellowship you're putting together to provide the people and the caregivers, as well as the money to provide for that event? That's what long-term care is. And there's 3 things it really does. If you have a policy, now there's different ways that you can pay for this. You can use your own money. You can depend on the government to pay for it for you. You could just become indigent and say, my family's going to take care of me, which I would put in, using your own money. Or you can have a policy and a plan in place that's going to provide the stewardship and fellowship that'll make it more of a triumph than a tragedy when that happens. And there's 3 things it delivers. Number 1, it delivers the lifestyle you've envisioned for yourself. So you've envisioned a lifestyle for yourself. How do you guarantee you're going to have that lifestyle? What planning have you done in advance? The second thing it does, when I talk about resources and what resources are people going to need, a lot of people say, hey, long-term care is easy. Long-term care is not any problem. I had a conversation with my brother-in-law recently. I was getting together, a fairly wealthy gentleman. And he said to me, I got a lot of money. Why do I need long-term care? I said, well, you don't have a money problem. You have a resource problem. He goes, what do you need? I said, well, you can pay for it, but if it's so easy, describe to me. Your wife is sick tomorrow. She needs care. Where do you find a caregiver? Where do you find a doctor that's going to visit your house? How do you get Meals on Wheels? How do you get all these questions answered? Can you hire a caregiver part-time? Where do you find these caregivers? How do you rate different nursing homes and assisted living facilities? How do you put together a long-term plan? And he goes, I have no idea, because I'd have no idea how to find somebody. I said, most people with money find that out. We can answer all those questions. There's money in the policy to provide you the resources to go out and hire your own claims concierge. And the companies that provide these policies provide that also. All the bills are paid directly. You have to collect receipts. You don't have to care about hiring an accountant if you're doing it on your own because you got to file taxes for the caregivers that you're hiring. Caregivers don't show up. You got professionals that will work with you to basically replace them out. So it offers you more access and control, not only over your money, but the lifestyle and the resources you need moving forward. And last but not least, and most importantly, it's not only the most effective way to do it, it's the most efficient way. So basically, a long-term care policy is something that's going to preserve both your lifestyle and your money. It's going to give you more access and control over the entire situation and the resources you need to bring it to fruition. And compared to anything else, there's not a much more effective or efficient way from a claims paying to a tax saving standpoint, because everything's paid tax free out of the policy. And the added is with linked benefit policies, live, quit, or die, you get your money back. If you live, you lose it for long-term care. We always talked about those statistics. If you die, you're going to get it either in a life insurance policy or an annuity if you've never used it, or what's left in it. If there's any money left going to your beneficiaries, then there's cash value. You can quit at any time. So you haven't lost any access and control over the money you're putting up for your future, as well as planning for that future at a point in time when you need it. And I'll share one last analogy with you when you're talking with clients. 1979, the movie The Muppets came out. And in that movie, Kermit the Frog sings "The Lovers and Dreamers and Me." That's actually number 24 on the Billboard charts back in 1979. A stuffed frog with a guitar, number 24 on the Billboard charts. Anyway, what's he singing about is rainbows in the movie, and are wanting to get to rainbows all the time. And he sings of some of the misconceptions about rainbows. But think about what a rainbow is. A rainbow is formed when you're standing in the sunlight. You're feeling pretty good. Sun's at your back. There's no problem. And there's a rain cloud off in the distance. And it's the refraction of light off those raindrops from the sunlight behind you. There's always two rainbows. So next time you see one, look for the second one. It's always fainter. And no two people sees the color spectrum the same. It's the same color spectrum, but no two people see it the same. When you're talking to clients about long-term care protection and planning for that small space and time for you in your life, when you're really going to need this, basically you're talking to people that are standing in the sunlight. They're 50 years old. They feel fine. There's nothing wrong with their knees. Their hips are fine, but they're taking care of mom and dad. And they know the pain that this can put on a family. But they're still standing in the sunlight and they don't believe it's ever going to happen to them. And they're focused on the rainbow. They're focused on the rainbow. They're looking off into the distance and they're going to travel and they're going to go on cruises. And then someday it's just going to be all over. It's our job to get them to focus on the rain cloud, past that rainbow. Why? That's what happens. The sun eventually starts going down. We're getting older. We're aging. The knees are going. The hips start feeling a little bit worse. There's a fall. There's an unexpected event, a visit to a doctor. Our memory starts slipping. Something as we age into our 80s and our 90s, because we're living a lot longer, then all of a sudden you're in a position where you need care. And that sun is set. You're not standing in the sunlight anymore. And that rain cloud's getting closer. And that rainbow has gone away. And now you have the rooftop. You have the poncho. That's the protection that you've talked to a person about when they were standing in the sunlight and you thought everything was going to be fine. And now it's the best thing that was ever written. Something they never thought that they would utilize, but it's going to provide the lifestyle they've envisioned for themselves and for their family and the independence and dignity that they all want. Give them more access and control over their lifestyles in that situation. And it's everybody involved, not just the person that needs care. These policies provide for everybody. And when compared to any other alternative, it's not the most, it's all both the most effective and efficient way to approach it. So when you talk to your clients, think about that. They're standing in the sunlight. They don't have any problem. They don't have a plan for after 90 days, and they're feeling fine. But they have felt the stress of taking care of parents. This is on their mind. They're in an age group that's adding to the population every day. There's more people than there are caregivers. I mean, think about it. 2/3 of us are alive today that weren't before. There's 108.7 million people over the age of 50. 77.2 million will need some sort of palliative care in the next 30 years. Now, I know everybody on this call is the other 30%. You're just doing great. But I want to warn you, you're going to be a caregiver. We're going to need you. I want to congratulate you because you're going to be there to pick up the pieces for those people. And these policies help both, but when you think about it, it's 1/3 of the population in the United States. Population is 333 million people. That leaves 2 caregivers for every 1 person. One of them is not going to show up. I'll guarantee you that. I've been doing this a long time. So now we're down to 1 and 1. So where do you get those additional resources? So I'd like to hand it over to anybody. If you have any questions, is there anything else that I didn't cover you'd like to hear about? Or do you need additional stories or song titles or anything I can give you for the cocktail party? And Rachel or anybody else, you want to jump in and add anything?
No, I think you covered everything, Kevin. I think, Eric, I'd be interested, since most of the advisors that are on the call, you know, they specifically, it's my understanding, they work with clients for health insurance purposes, Medicare. Is there any questions out there from, you know, from the group on, you know, just how to get started with the people that you're already working with? I was wondering if you had any questions like that, Eric.
So far, I don't see any questions in the chat. If you guys have any questions for Kevin or for anybody else on the panel, go ahead and use that chat right now. But yeah, most of the go ahead.
If I could generally talk about how do you start the conversation, or who do you approach? The average age of the person purchasing these policies right now is somewhere between the ages of 58 and 62. We're quoting people as young as 35 now. 10 years ago, 15 years ago, it was people in their mid-70s. The reason we're seeing a lot younger people are all the things I was saying previously. It's a lot of baby boomers taking care of parents that feel the pressure, that have a much clearer view than their parents did of how this will play out in life and as you move forward, and want to make sure that they don't put their financial means and or their children in the same position should they need to make a decision. So you see a lot of individuals in their mid-50s, 60s are looking at retirement. They're saying I'm going to be retired in 10 years. But their assets aren't as flexible as somebody who's 70. So in other words, they might have 200,000 to give in, but they want to pay annually. The important thing to think about with these programs is they can be designed to fit the financial needs of the person wanting it. So you're going to see a lot more people in their 50s doing continuous pay. You might see more people in their 70s doing more lump sum because they might be using retirement money or an old annuity that they had set aside that they can leverage now. But really, when you're talking to these individuals, it's ages 45 to 70. Your sweet spot's probably 50 to 65 because of health issues and getting them underwritten. You do have to be underwritten for these policies, regardless of what company you go with. But there are companies that'll take people less than healthy that are out there. And I know they'll cover that more on Thursday. So when you're looking at your book of business and the people you're talking to, don't discount anybody. But those people in their 50s, early 60s that have parents, I always like to ask people, how your parents doing? Ask them at some point in your conversation, how your parents doing? I guarantee you 9 out of 10 will start telling you a horror story of how they're taking care of their parents right now. So that's, you know, that's where to look in your book of business or who you're talking to out there.
Well, I know, like for me, we've got, between my wife and I, our parents are all still alive, but they're all in their late 70s, and we're definitely thinking about what's next for them. We watched our grandparents go through it. Now we're watching our parents start to go through it. So it's definitely an issue that's on our mind quite a bit.
And we see some children that'll come in and actually purchase the policy for the parents, or offer the parents some sort of joint support. Maybe if the money's coming out of an IRA or an old annuity, they go, hey, if we're going to leverage this and turn it into life insurance, maybe we could pay the taxes now for you. So there's a lot of different options, but the more the family becomes involved, because it is a family event, we'll actually see them get involved in the decision making too. And you see a lot of people. I had a friend recently tell me his mom's 93. He's telling me how great his mom's doing. But, you know, that does take some of his time up because he does have to go over and prepare meals for her. And they had to hire somebody there because she couldn't get herself out of bed, but she really needs help. And he doesn't want her bathing on her own, and somebody can help her get dressed. But she's just doing great. She's doing great. And I tried to explain to him, you do understand your mom's going through a long-term care event. You're hiring caregivers to help her get out of bed, to get bathed in the morning, to get something to eat. That wouldn't happen if you were all there. He kept saying, but she's doing great. She's 93. She's living in her own house. And that's the view. It's not where you live. It's the lifestyle you're going through. And his mom was a perfect example of somebody who aged into it. Cognitively, she was fine. She was still living in her own house. But she actually has outlived the usefulness of what her body could provide from what she needed at that point in time, which was starting to eat in the amount of time that her children had on their own or their own independence, because they were spending time, not that they didn't want to do it, but he even admitted it'd be a lot better if he had resources available to help him. And that's why we need to start looking at this. And just because your parents are doing well, or you're living in their own house, doesn't mean that something like this couldn't be providing for them and giving you all more resources to have the independence and dignity that you want.
This is Phil. RD with Concourse. Kevin did a really good job explaining, you know, the need and everything. Obviously, it's a vital product. It's a solution that you know, more and more people are needing. And unfortunately, from the client standpoint, a lot of times you're not aware of the need until you're made painfully aware of the need. Where, you know, it's like you're on the way back from the doctor, and it's like, oh, maybe I should call my agent. Unfortunately, if we're waiting on the phone to ring, sometimes the answers that we're going to get are not the ones that we want. So, you know, with the way you guys are set up and the conversations that you're having, you know, with being, you know, the Medicare and the health insurance side of things, there is a really nice segue, because there is, you know, I believe, and correct me if I'm wrong, because I do not spend as much time in this space. Medicare pays for qualified swing bed skilled care for, is it 100 days, 110 days? Is that correct, Eric?
It's 100 days.
100 days, yeah.
And in order for it to pay as well, you pretty much have to exhaust most of your assets, which can be detrimental, and that changes the entire conversation. Sorry, this is Misty. So yeah, that's not something that, you know, that clients should consider their plan by no means.
Yeah. So with Medicare, you know, as you're explaining the benefits that are, you know, benefits and the provisions underneath that contract, it's a very easy segue to say, you know, you may qualify underneath Medicare to have some, you know, skilled care for a period of time, say it's 100 days. Once that's exhausted, then there's no longer a benefit underneath Medicare. A simple question is that you can ask the client or the prospect is, what do you have in place to provide for resources at that point? And that's when you're going to say, well, nothing or something, or what do you mean? And then that kind of opens up the conversation to say, well, you know, we can look at some long-term care plans. We can look at transitioning some assets to help provide resources when you need it, maximize income, you know, to have the conversations to open that up. So using that 100 days with Medicare it's a really easy segue transition. So you're just blending the two together and opening up that door in that conversation. Medicaid is obviously, you know, you do have to, like Misty said, you know, you do have to expend all of your assets. You basically become impoverished at that point. I know I lived in a state where you were allowed to have a home, a car, and $2,000 cash. Everything else had to be gone. So it was interesting. I had a friend's grandparents had not done necessary planning, was fairly wealthy, and he went out and bought a $140,000 vehicle because he said, I can keep my car, at least I'll buy a good one. So, I don't know if that's good financial planning on his part, but he got a nice car. But so, transitioning and having those conversations from the agent to the client standpoint, pivoting off of Medicare and explaining to them the benefits that come entailed with that, and then linking it to it saying, okay, you've got, you potentially do have 100 days worth of coverage underneath Medicare. If you get into an extended care need, obviously it's subject to provisions. If you need it longer, then we need to look at, looking at something different. The one thing specific to One America is they have, as far as funding, the funding provisions and the funding options that are available through One America are the most extensive. The client doesn't necessarily always have to write a check. They can take money from old life insurance contracts. They can take money from qualified plans. There's a lot of different ways that they can do it where they reallocate and reposition assets to help fund that need. And when we get into an individual case-by-case basis, and I'll put in the chat, I'll put my email and a telephone number. We can get into some of the specifics regarding the contracts where, depending on where they're at, they're going to receive something back. So the public perception out there is that if we were to walk down Main Street and said long-term care insurance, you'd elicit a couple different responses. One of them would be, grandma had it, never used it, wasted the money. The other one would be, I don't think I need it. The other one's going to be, my grandpa had it, and wow, I'm glad they did because he's been in the nursing home or been getting care for the last 15 years. He certainly won on that, right? The contracts of old were kind of a use it or lose it. The new ones are not. The asset-based plans are, you're going to receive a benefit greater than the premium paid in, either in the form of claim needing care. You're going to receive it in a death benefit if you don't need it, or you're going to get some combination of the two. But in some shape or form, something's coming back to you as yourself or to your beneficiaries. So it is not a use it or lose it, which a lot of times opens up people's eyes. Whereas the old contracts, you could put the old standalone long-term care policy, you could put a return of premium rider on it. It was extremely expensive, but these don't necessarily fit in that same box. So as we go along and as we get into the case-by-case basis, I'm more than happy to sit down and visit with each of you and help figure out what is the best path forward and provide the best solution for them. But I think that as you're visiting with customers and prospects, like I said, linking it, having that, how do you open up this conversation? So you're already talking about something, they already trust you, they already have that relationship with you. You can expand these offerings, you can deepen the conversation by saying, here's what's covered underneath your current plan. Here's what's happening should these things play out, and then what is your plans after that, and then just let it sit and see what they say. And a lot of times they'll tell you, well, I don't have anything, or I didn't know there's an option, and then it opens up the ability to have it. And the last thing I always share with the long-term care thing, a few years ago I was asked to be in a charity fundraiser for the Alzheimer's Association, and we did a local Dancing with the Stars, and I was asked to be a star for some reason, but we raised, it was a 3-month project, practice dancing twice a week, and we had 1,500 people in the room, and we had to raise money, right? And we raised almost $1 million. There's 10 dancers. We raised almost $1 million over 3 months for the Alzheimer's Association. And what blew me away was that there was not a single person that I would ask for money to donate, whether it's $5 or $5,000. There wasn't a single person I would ask that didn't have a story about how somebody that they were close to either had Alzheimer's or dementia and that they were connected to it. So there is, this is real. This is something that happens. People are dealing with it and struggling with it every day. It's a silent situation. Nobody wants to talk about it. It puts a tremendous amount of stress on the family. Nobody goes out and wants to spill the family tea. So it's out there, but it doesn't necessarily get talked. So people are very well aware of what's happening and what could happen because we're living it, and they've got a lot of questions and we've got a lot of answers. So by having that relationship and bridging those conversations, you can open up a lot of ways for you to help these people sleep better at night because they're taking steps to ensure that their care needs are taken care of and not putting stress on the family.
And here's something to think of from the Medicare standpoint. Because a lot of people out there, there's basically 4 objections you get to long-term care. It's never going to happen to me. Kids will take care of me. I'll pay for it myself. And or if it does happen, it won't take that long. So how bad can it be? As far as paying for it for yourself, and you'll have the figures right in front of you from a Medicare standpoint. Medicare is the cost of Medicare and includes in Part D are all income based. So if you choose to pay for it yourself, you don't want any help finding caregivers yourself, you think you have all the resources, you want to use your own assets, go ahead and do it. Well, first, if you pay anybody in your home more than $2,400 a year other than a spouse or a child living under the age of 18 living with you, you have to give them a W-2, which is going to force the individual, and they never realize this till they get in this situation, to hire an accountant to keep records, to define that job, and every 2 weeks to file the taxes, and then provide a W-2 at the end of the year so that they can do their taxes. And there is a cost of an accountant. Ask anybody who's been through it that does it on their own. Everybody has to do it. It's an IRS requirement. $2,400 a year. You'll exceed that in the first 2 weeks if you're hiring caregivers. The second hidden cost no one thinks of is if you're using your own money. So you're probably withdrawing it from a mutual fund, an annuity. If you borrow it from an old life policy, it comes out tax-free. But most people are usually selling stocks, selling bonds, and or withdrawing it from an annuity, which is going to increase your income on an annual basis. Take a look at the difference in cost when you're earning $50,000 a year and when you earn $150,000 a year, and how your different parts of Medicare are charged and what you're paying for it. So by having a plan in place where everything's paid tax-free, they take care of the bills for you, they do the plan of care, doesn't matter what company you get a policy with, it's all handled the same under the IRS tax code section, and doing it on your own. When I say access to resources, there's a ton of hidden costs that clients aren't anticipating. And a big one is the impact to your pocketbook on hiring caregivers yourself. And then what are the additional taxes involved? No one ever looks at the Medicare one, saying, wait a second, if I added $80 or $90 or $100,000 to my income, what am I actually paying for this now? And you get nickel and dime to death. And that's all the additional costs. It's not the cost of caregivers. It's, do you have the resources available to offer you the assistance you need and to make sure that we're not increasing the amount of stress on your pocketbook for that period of time that you may need care in your life. And Medicare is a big one that no one ever thinks of.
One thing that I'm going to chime in, it kind of goes off of what Phil and Kevin was saying, and we're going to get really deep dive into it when we have the conversation. But think about these products this way. These policies are designed to allow your client to maintain the lifestyle that they plan for. When they start planning for their future, they're not looking at the retirement plan saying, I need income for long-term care if I need it, for home health care. They're planning for the lifestyle that they've envisioned for themselves and for their family. Don't look at this as a nursing home policy. This is a repositioning of assets that allows your client, and I know I'm going to say it a third time, to maintain the lifestyle that they envision for themselves and their family. And that's going to be the big focus, and that's going to be a lot about the conversation topic that you're going to hear probably tomorrow. And personally, a lot of people on this phone know that, I actually had that same event happen to us. My mother had ALS. And these types of policies allow your family to be your family, not be the caregiver. Unfortunately, my mother did not have that. And my sisters and I had to split up the responsibility. I was the financial responsibility. And then one of my sisters was the caregiver responsibility, and then one sister did nothing. That can break a family. these policies allow for families to be families and not put that burden when on the children or the spouse. So those are going to be things that you're going to hear about all through the week. But these are real things I never thought would happen, but they did. And these are real things that could potentially happen to your clients. And there are going to be clients that this is going to happen to in some capacity.
And Misty brings up a good point. Recent poll was in the Wall Street Journal. Over 50% of Americans claim they have no close relationships in their life. They're not saying they don't have any friends. They're saying they don't have relationships close enough where they can really depend on people. So think about this. Ask somebody, if your tire was flat and you had to call somebody at a moment's notice to come help you fix your tire, who would you call? And I bet you most people have to think about this. So I don't know who I would call. Let me think about that. Let me look at my phone. So what you're telling me is you don't want to look that far out in time. And you're saying it'd be easy to find a caregiver. Yet you can't find somebody to help you take 30 minutes out of their time to help you fix your tire. And yet you claim you have a whole slew of people that are going to help you for an unlimited period of time. We don't know how long this is going to last. Take 12 to 24 hours a day out of their life to help take care of you. You're much better off having a plan for that, when the majority of us would have a hard time finding somebody to help us fix our tire, we're telling people. And that's really what these plans do for you, and what they'll provide for clients is that peace of mind that they'll have the people to help them at some point in time. That plan will be taken care of. And when they have to implement it, it's implemented at a moment's notice. It's not something you have to think about. You took care of it years before.
The other kind of dovetailing off Kevin, and I'll be quiet because I know we got a few days of these things, but you'll hear me say this a couple of times over the next couple of days. You'll hear the term self-insure. So you'll have somebody, especially if they're, I would consider more affluent, they say, well, I'm going to self-insure, right? And I would encourage you to correct them, because there is no self-insurance, there's only self-funding. In order for there to be insurance in place, there has to be a transfer of risk. If the client or the individual is willing to take on the burden and the expense of providing their own care, they're self-funding. And I had an individual a long time ago as a very wealthy farm client. I lived in North Dakota at the time. If you can't pick that up from my accent, that's the dead giveaway. So whoever had that in the pool, you win. Yes, then with him, and he said, I'm going to self-insure. And I said, well, you're not going to self-insure, you're going to self-fund. He said, well, I got enough money, I'm not really worried about it. And I said, his name is George. I said, George, you've accumulated a fairly substantial business and a very, very healthy farming practice. How did you do it? And he said, well, I would just buy up farmland when it was on sale. He said, my neighbors would have bad years, and where they were getting out of the business, and I'd buy up the acreage. And I said, okay, so if you're going to buy a section of land and you can get it for half price today, but it's full price tomorrow, when are you going to buy it? He goes, I'd buy it half price today. I said, what if you couldn't afford it? He goes, I'd figure it out. He goes, I'm not going to pass up on that deal. I said, so what you're telling me is you're going to wait till tomorrow and pay full price when you could buy it today and pay half price. That's what happens when you buy long-term care. He goes, okay, well, I get it. That makes sense. He goes, but I got 2 daughters and I got a wife, and they can take care of me. That's what we do. That's what we've always done. We're family. We take care of each other. I said, that's okay. I said, I want you to do me a favor. He was about 6'2", 250 pounds. The 2 daughters and the wife who were there with us didn't weigh as much as he did combined. I said, I want you to do me a favor. I said, can you just get on the ground and lay down? And I said, I want to figure out who's going to pick you up. He said, what do you want me to do that for? I said, well, your plan is when you fall down, you're going to have 1, 2, or all of your family members pick you up and put you back in the chair. Or if you fall out of the shower, or if you fall off the toilet, that's your plan right now. And then I just shut up. And he's quiet for about 2 minutes, and he said his favorite curse word. And he said, well, do I have to get blood for this? Is there going to be a needle? I said, no, there's nothing. He goes, all right, get it going. So a lot of times they have a plan, but they haven't thought the plan through. This guy's 250 pounds. Like, his 120-pound wife is not going to be able to pick him up, right? He's a smart business person. Paying full price is not in his vocabulary, right? And yet his plan was to pay full price and have his kids do something that they couldn't do. So a lot of times they might have a plan and they might tell you, but it's okay to ask them some questions to get them thinking, because once they verbalize what that plan is, they realize it maybe not be just because it's a plan doesn't mean it's the plan, and it certainly isn't the best plan.
When you think about, and a lot of people think their kids will just take care of them. There's two things to think of. Number one is, have you ever actually had that discussion with your children? I can guarantee you they have a much different view of it. Now, does that mean they don't love you and they wouldn't take care of you? No, push comes to shove, they love you. And they would do it regardless of the situation, but it wouldn't be their first way that it should be handled. And I like to point out to clients, and it's a rough way of saying it, but when you think about it, there's two things I always point out to clients. They say their kids are going to take care of them. First thing I point out is your kids didn't ask to be born. They weren't part of that discussion, and they are not responsible for taking care of you. So your plan should not be for your kids to take care of you. Now, if you've discussed it as a family and they know what they're getting into, at least you have a plan. I would recommend against it if you know all the statistics, and that's a whole different call that we can have. I would recommend against it. But in most situations, that discussion has never been had, and they don't realize that the kids didn't ask to be born. And they are not responsible for taking care of that person. That's their responsibility to put that in place. So important to think about, but those are common, and what Phil's bringing up, these are all, like I said, there's not very many amount of objections you get, but the more prepared you are in the language you use and preparing yourself for those objections leads to a lot more success in getting people to move forward on these policies, because you will get the objections. Even people that want to buy it will still be thinking these things.
All right, this is great stuff, you guys. I really appreciate you all being here today. We are going to continue on all week at 2 o'clock Central Time. Tomorrow, we're going to talk about the solution. So everybody that's on the call, please remember to register for the Tuesday call. And we'll see you back here tomorrow. Thanks, everybody, for being here.